Today in the grain market, soybeans were higher as a steady rise for the fifth day in a row. Just tells us that that 50-cent rally off last week Monday's low of 821 is pretty solid. And with the market's uncertainty right now, it guarantees like really large range moves and a lot more volatility coming in. It kind of represents the fact that those oversold conditions got a lot more participation coming into the market and really spurn this momentum to the upside and to get things moving. Now that the stock market has come down so low, it did exactly what we thought it might happen. Is a lot of the fund managers managed money is starting to move over into the commodities because commodities actually has some upside potential, regardless of the fact that our supplies are still pretty plentiful. Now, with corn, the market was kind of steady today. It didn't follow along wheat and soybeans, but it's kind of stuck in a little bit of a consolidation mode. But don't lose hope right now. I think that the market has been kind of tethered to the crude oil market, and it's been unable to kind of like shed the cement boots that's been holding it down. That being said, we're just about a week away from getting planting intentions. And I believe that as the rest of the grain markets start to move forward, I think that corn will at some point perhaps maybe create a slingshot of some sort to catch back up. So don't count corn out at this time. Wheat really rallied, and the Russian announcement that they were going to suspend exports, I think, was what was really driving the market today, and wheat was really leading the charge, up 20 cents, just as soybeans, I think, adds to the momentum that the bottom was in. Do you see what happened? That wheat dipped down, passed right through the $5 support level, and then turned right around and came right back. So what does that tell us? That benchmark of $5 really was very strong. I do find it interesting that wheat, of all the commodities, is what we have most plentiful really around the world. And yet during this global pandemic, it seems that everyone is kind of going for flour and pastas and breads, and those kind of items is kind of like feeding the idea that the wheat market is going to rally. And so it's just setting aside the fundamental fact that we do have a lot of supplies, and now everyone's coming for these markets. So as we get more participation, a little more momentum, we can see these markets really start to move. That's not to say that we're going to have other challenges with this coronavirus that may stall this market out, or now we're going to have much more wide volatility. So there's plenty going to be ahead. And I think that now that we have this new driving force to the upside, something that we actually haven't seen in a couple of years, there's going to be a lot more to be said about volatility in the commodity market.